Hey, good morning, everybody. This is Dan at Theta Trend. Today is Thursday, October 24th, 2013. It is 5:10 a.m. or so, a couple hours here before the equity markets open in the U.S. Today, I'd like to go through a couple of trades that I'm sort of stalking. And, we had this big move up in equities in the past couple of days, and a lot of assets went, in some direction, either up or down. And a lot of these markets are overextended in here. And I just say they're overextended because I can't find trades that meet my risk management parameters. And when that happens, there's not much I can do. You sort of have to sit and wait. But before I do that, I'd like to do just a quick update, a little housekeeping of what's been closed out, what's still open here, and things like that. So if we go over here, these four trades, the USO, the GLD, the TLT, and the IWM trades, those were my November expiration trades, and they're all closed out now. Happened at various times. I think the last one was closed just a couple days ago, the TLT. And, this was a really easy month. Everything came back profitable. All of the prices moved in our direction. We did have that initial shakeout in the IWM, if you remember. I'll just pull that up here. We had that, the entry somewhere in here, I think on this day, September 30th. We got that shakeout and then that move higher. And this move higher just took us out of the trade. So it was a pretty smooth month overall. No heat, nothing closed for a loss. And I usually expect that not to continue whenever things are going in my favor. But then I also had this December FXE trade on down here. That was closed yesterday for a nice profit. And right now, all I have open are two trades in GLD and UNG. UNG is sort of my nemesis, and it always hurts me. But these guys are both pretty close to their stop levels. I'll just pull those up real quickly. And so I don't know, they may get stopped out, and that's fine. It's just what happens, and then we'll be looking for trades in the opposite direction. So this is GLD. It's right up here. This average true range trailing stop is sitting essentially right in line with the 50-day moving average there, the red line, so 129.67 we can call that. And if we get a close above that level, I'm going to be closing the short trade I have on the call credit spread and looking for a put credit spread when the risk parameters are met. I guess we'll just see what happens. The UNG, I got filled in this thing here somewhere around 19 or something like that, and it just fell down a little bit more the next day, and then it just sat there yesterday, and our stop level is that 1835. I have an alert in there. If price closes below that 1835, I'll be closing the long trade and looking for a short trade. I'm hoping we get a rally up here, but I don't have any control over that. So let's go back over and take a look at a couple of trades that I'm watching. This is the QQQ, and like all of the equity markets, it got the big run and the gap higher, and it's just sort of sitting and consolidating up in here. Our stop level that we're showing is basically 79.23, as you can see with the cursor, and that's the level at which we'd be managing risk from. So I came over and I dropped a vertical into the analyzer here. And what you see here, 82.28, this is the live price as of the close yesterday. Actually, it might even be pre-market right now price, but at any rate, this is the live price. And down here, this level is 79.23. So what I'm looking at is I'm looking at what I can sell this for, which in this case is about $66 versus the risk I'm taking. And if price was to trade to the stop level immediately, it looks like it'd be a loss of about $72 before commissions. So the risk reward on this doesn't pay out, basically. At a minimum, and just sort of as a rule of thumb, I'm looking for something in the neighborhood of 1-to-1. And that works out as long as the probabilities are 50% or greater, 50% winning trades. And in all honesty, I like something that's better than one-to-one. So in this market, I'm just kind of sitting here, and what I've done is I've put in an alert down here at 80.36, and if price trades down to that level, it'll probably be a favorable risk reward, and I can enter a trade. Why do I say that? So if you go here, what I like to do is I like to say, okay, $66 is the credit I can get right now for this spread. And if we come down to this 80, what did I say, 36 or so, we're looking at $41. So we could just say $40 more because we would be taking a $40 loss at this point. So if that was to happen immediately, hopefully we could sell this spread for somewhere in the neighborhood of $1 or $1.05, something like that. So I know that if price gets down into there, I'm probably going to be getting along the QQQ because the risk reward is going to make sense at that point. In fact, at that point, I may even be able to move my short option from the 79.74, move it down to the 78.73 or something like that. But for right now, the queue is a little bit extended, so there's not much to do other than just hang out and wait for it to come back down. Let's take a look here. This is the USO, and this is a similar type of thing, except that this thing just kind of fell off of a little shelf here late last week and into this week, and now the stop level on this thing is up here at 37.15, and this is oil in case you're not aware. But what we're looking for is some sort of a move back up, and the USO, the premium's a lot smaller because it's a smaller product. And so what I was looking at a 37.41 vertical, and the credit on that thing right now is 34 cents, and 37.15 we'd be looking at a loss of $70 or something. So this thing is so far out of whack right now that it's going to really take a bit of a rally or the stop to move down before it makes sense to enter this trade. And so again, in this market, we're just waiting. I mean, if you go out here, I was looking, the premium just on a straight short 37 call is something like 37, 38 cents. So it really doesn't make sense in here to do anything other than wait. TLT is another market that I like to trade, and I've been watching that as well. The stop moved up here from about 104 to 105 yesterday, and I started looking. I said, oh, maybe this is time we can get long. Maybe there's something out there. But again, it's just a little bit too extended. The implied volatility of TLT is around 11%, so it's a lot lower than the oil or any of the equities, and so it makes it so that my spreads tend to be a lot closer to the strike price, or not the strike price, the actual price. So 105 is essentially our level on TLT, and if we come back over here, I think we'll see the same thing more or less. I was looking at the 105-100 put credit spread in December, and we could sell that for a credit of $71, so a little bit better than the QQQ if you remember. But again, if we come down to that 105 level today, we're looking at a loss of about $88, and that's greater than the initial credit we can even expect to receive. So in this case, again, it's just sort of a waiting game. There's not much to do here. There is one market that I'm eyeing a little bit, and that's silver. And I have an order in. We'll see what happens or see if it gets filled. Silver came up here, sort of like gold. Let's just take a look at gold. Gold and silver move in a fairly similar fashion. They're somewhat correlated. So if we look at gold, gold's come right up to that stop level here at 129.67, and it's hovering there, but it hasn't closed, it hasn't reversed. Silver, on the other hand, has. So silver yesterday closed above its trailing stop, and that indicates that we should be looking at a long trade. You see the little green dots down here. That tells me that the stop's moved to the downside. And that stop level is 2043. So if we come back over here and take a look at silver, I think I have an order sitting in here, so maybe I'll just move that over. I'm just going to analyze a duplicate trade here, and this is just sort of a rundown. You can see I have some positions here, DBA, the grains, gold. The gold trade's a little bit underwater. I have an outright position in Greek stocks, international real estate, sugar. This is just the silver order sitting in there, nothing there. There's my natural gas trade underwater a little bit, not surprising because it's natural gas. And WIP is international inflation protected bonds. And then I have some Forex trades down here, the euro, New Zealand dollar, Japanese yen, which is the carry trade basically, and dollar Swiss franc. But let's go back over and take a look at this silver trade. So I think we said 2043 was our stop level on that, if I remember correctly. And I do remember correctly. Way to go, Dan. So let's move this guy back over here to 2049, 7, yeah, 40, 2040. So at 2040, we're looking at a $34 loss. And the initial credit that I'm hoping to sell this for is $60. And so if we were to collect 80% of that, that would be $48. And if you take commissions off that, for me, that's $6 round trip. So we're at $42. So $42 potential credit versus the $44 loss. Was that right? No. 2050 is $30, $36 or something. So the risk reward here makes sense. The potential credit that I could receive is slightly greater than the loss I would take if it traded to my stop level immediately today. So I have this out there. This was the live price yesterday, 21.85. So we'd need to see a pullback down here to 21.38 or so to get this thing filled. If we go back to the chart, what did I say? 21.38, I think. Yeah, 21.38 or so. So 21.38 corresponds, with something a little bit above this red limit line, and maybe this is just taking into account bid-ask spread or something. But so if price falls down to here, which really isn't that far from where it is right now, up here at 21.75, 21.80 or something like that, we should be able to get long silver and get a trade going. And the reason I sort of like that as well is that with the short gold trade going against me, it'd be sort of nice to have something in a correlated market that's going in the opposite direction, especially if I'm wrong about the direction of gold. So at any rate, that's all for today. I hope that helps. Please shoot me an email at dan@thetatrend.com if you have any questions, and visit the blog www.thetatrend.com. You can download the trading system out there for free. Hope it helps. Thanks, guys.